2 weeks after I decided to let my winners run, I scored my biggest trade to date. It banked me $5,024 in 19 days. It was a 13R trade, so for every dollar risked, I got $13 back. Now the setup, it was an EP setup, and the entry was on the 8th February 2024. It was in the biotech sector, and the market cap was around $3 billion, which is considered a mid-cap stock. It was an obvious play and one that flew under the radar for many other traders. I'm excited to share with you my earnings play for Viking Therapeutics, ticker VKTX. First of all, let's talk a bit about the biotech sector. Many new and seasoned swing traders steer clear of playing biotech stocks. Yes, they can make explosive moves seemingly out of nowhere, but where there's huge reward, there's also huge risk. Not only do most biotech stocks have no earnings, but you also have to worry about pending data from clinical trials. If you have a big position in a biotech stock and bad news comes out, then best believe that you're going to be losing some sleep. I've never been afraid to trade biotech since they can offer some huge upside. Some of my best trades have been in this sector, but I'm fully aware of their volatile nature. However, unnecessary risk can be mitigated simply by avoiding holding a position into earnings or pending trial dates. Fortunately, so far, I've never been caught up in a devastating gap down move in any sector, let alone biotechs. And if I stayed away from this growth sector, I would have missed this play. So now let's talk about the setup. So on the 7th February 2024, VKTX announced earnings after the market closed. Now, if you know how I trade, you know I don't really do a deep dive into earnings. I only look at the numbers, revenue growth and surprise percentage. Everything else is just noise. I could care less about how many new subscribers Netflix has or how many chicken wings Wingstop has sold. As far as I'm concerned, the importance of the news will always be reflected in the price action anyway, and that's what it pretty much all boils down to. In any case, VKTX makes no money anyway, and like many biotech stocks, they move based on the potential of their drugs. So in the pre-market the next day after earnings are announced, the stock gaps up over all-time highs, and I have it on my watch list for potential entry. When the market opened, I wanted to see high relative volume and whether it can hold the gap. And within the first 5 minutes, relative volume rose to 406%. That's good, as I typically don't enter any trades with less than 400% RVOL. I allowed the range to be set within the first 5 minutes and waited for the price to break above that range. It does so almost immediately after, and I pulled the trigger, buying 205 shares for $27.05. As always, I set my stop loss at the lows of the day. Now all there was to do was to sit and allow the stock to do its thing. Immediately after my entry, the stock blasted off, and after around 20 minutes, not only did relative volume increase to 530%, but more importantly, price ran up nearly 1R, which allowed me to move my stop loss to break even. I usually move to break even whenever a stock moves up to around 1R. Now at that point, my trade was completely risk-free. The worst case scenario was if price were to pull back and stop me out at break even, which it nearly did. Most of the time, the price will pull back after my entry, and even though I hate it, it's something that you must expect as a momentum trader. Then I had to just wait for my first target to hit in order to take some profit, which was when the price reached 2R. That wouldn't be until 11:42 AM the next day. Well, truth be told, I got a bit scared and sold half my position, around the $31 area, but it wasn't far from my target anyway. My stop loss is still held at break even, and my plan was to trail it with the 10-day EMA. or a higher low depending on how price moves in the days or weeks that follow. On the 16th of Feb, there was news of a takeover speculation that gave the stock a lift higher, with price closing very strong that day. This prompted me to move my stop loss up to the recent higher low. Then on 27th Feb, 19 days after my entry, while I was in the shopping centre, I checked the TradingView app and saw that VKTX had gapped up over a huge 70% in the pre-market. This was due to the positive results in their trial of their weight loss drug. Now, in a scenario like this, you can wait until the market opens and try to see if buyers can push the price even higher, but I didn't want to risk it. I was already happy with how much profit I was in already. Now, as soon as I got back home, I jumped on my laptop, opened up Dash Trader, and I saw that during my time away, the price had run up all the way to $87, but had also tanked all the way back down to $40. I'm so lucky not to have been at the desk when that happened, because surely I would have panicked and sold on the way down. Anyway, by the time I got to it, I was able to close the rest of my position for around $70.80, which netted me just over $5,024, or 13 times my risk. This trade was my biggest winner to date, so of course I was on a legal high. But any veteran trader will tell you that this is one of the most dangerous emotions to have in trading, since avoidable losses come right after your biggest winners. I found that the hard way, as I would go on to make 2 terrible back-to-back losses as I attempted to squeeze more out of the market. However, the market told me to eat these losses instead. They were relatively small losses, so graciously I ate my slices of humble pie, and I thought to myself, when will my next big winner be? Turns out it would be a while. If you have any questions regarding this trade, just ask me in the comment section below. And if you found this video helpful, just give me a thumbs up and subscribe for more trade reviews. See you in the next video.